Tax Rate Recapitulation Form, or Tax Recap, is a 4-page form that assembles all information necessary to calculate a community's tax rate. This document, plus a series of supporting schedules, include a community's entire budget and applied sources of revenue for the fiscal year. By completing the tax recap, the community sets its tax levy and tax rate for the fiscal year. Completing the tax recap is the culmination of efforts by local officials, but it is the responsibility of the assessor to submit the tax recap to the Division of Local Services for review and approval. Once the tax recap is approved, the community sets its tax levy and tax rates for the fiscal year. If you would like to learn more about the role of local officials in setting the tax rate, click on the link. Otherwise, click the red Next Page arrow to continue with the tax rate calculation. Filling out the tax recap begins by completing page 4, the Appropriations page, and working backward to page 1. Remember that the tax levy is calculated by subtracting all of the community's applied non-property tax estimated revenues and reserves from its budget, or in other words, its expenses. Page 4 summarizes appropriations and authorizations, in other words, the funding sources, by the community's legislative body. These are listed by meeting date, since the prior fiscal year's tax recap was approved by the Bureau of Accounts. All appropriations, or in other words expenses, are recorded in columns on page 4, except those specifically voted from free cash or other available funds to reduce the tax rate, which you will see separately reported on page 2 of the tax recap. Each meeting is recorded on its own line on page 4. If a special meeting is held with an annual meeting, then each fiscal year gets its own line with the same date. The first column shows the date of the meeting. The second column shows the fiscal year for which that meeting's business was conducted. Column A is the total appropriations of each meeting. It is the sum of columns B through G. Column B is everything voted through raise and appropriate, sometimes called raise and appropriate from taxation. Column C is all free cash votes, except those voted specifically to reduce the tax rate. Free cash votes recorded in column C are supported by Form B1. Column D is appropriations from other available funds and is supported by Form B2. Column E is appropriations from offset receipts and is supported by Form A1. Appropriations from enterprise funds are shown in column F. Each individual enterprise fund in a community is supported by Form A2. Community Preservation Fund appropriations are shown in column G and are supported by Form A4. Two additional columns, column H for Massachusetts General Laws, Chapter 44, Section 53E and a half, revolving funds, and column I for borrowing authorizations, are also included on this page, but are not included in column A, total appropriations. Page 4 is signed by the town or city clerk. Remember that the tax levy is calculated by subtracting all of the community's applied non-property tax estimated revenues and reserves from its budget, or in other words, expenses. Page 3 represents one part of the community's non-property tax estimated revenues not allocated to any particular activity or department. Column A records the actual amount received for each type of receipt in the prior fiscal year as certified by the accounting officer. Column B shows the amount estimated by the community's financial team to be collected in the current fiscal year. The categories of local receipts reported on page 3 include motor vehicle, meals, and hotel, motel room excise taxes. Charges for municipal services such as water, sewer, trash, and hospitals, if not enterprise funds. License and permit fees. Investment income, departmental receipts from schools, libraries, cemeteries, and others, Medicaid reimbursement, miscellaneous recurring and non-recurring receipts, which also require a detailed breakdown to be uploaded into Gateway. As a general rule, written documentation must be provided to explain when estimated receipts increase by 10% or more from the prior fiscal year's actuals. The Director of Accounts may, however, alter this percentage depending upon special circumstances or general economic times. Page 3 identifies 10 lines of local receipts that are used by the Division of Local Services to calculate the municipal revenue growth factor, which is part of the Education Reform Act's minimum school spending formula. The categories are identified by an arrow in the left-hand column. The accounting officer must sign page 3 and certify that the information it contains about prior fiscal year actual receipts and appropriations certified by the clerk on page 4 is accurate and complete. Page 2 summarizes amounts to be raised for the fiscal year from appropriations, other amounts to be raised, estimated receipts, and other associated revenue sources. It is used to report all anticipated expenditures and all revenues available and voted to offset those expenditures, and to establish the amount of real and personal property taxes that must be raised to balance the budget for the fiscal year, which is the tax levy. Remember, the anticipated tax levy, which is shown in Part 4, line C on this page, is usually different from the tax levy limit. Our levy limit worksheet yielded a levy limit of $32,110,561. The tax levy, which in this case is $31,552,569.92, shown on Part 4, line C on this page, must be equal to or less than the levy limit of $32,110,561. In this case, it's less. Let's take a closer look at this page. The first section on page 2, Part 2A, reports total appropriations from page 4, as well as other amounts that the law allows to be raised without appropriation. Note that Part 2A, Appropriations, is a carry forward of the dollar amount from page 4, column A, the total appropriations. The other amounts to be raised, which are funded without appropriation, are recorded in Part 2B, lines 1 through 10, and also in Parts 2C and 2D. These expenses are either deficits from the prior fiscal year or categories that require no appropriation, but must be provided for by law. These items may include debt and interest charges not appropriated, final awards, revenue deficits, snow and ice deficits, unappropriated and unreserved community preservation funds, or CPA, state and county cherry sheet charges from Form CS1EC, and the allowance for abatements and exemptions or overlay. These expenses must be documented by the appropriate finance officer and uploaded into Gateway. The total of this section, shown on line 2E, is everything the community has budgeted to spend for the current fiscal year. Part 3 on page 2 records all anticipated state and local revenues, other than property taxes applied against the budget, and totals them on line 3E. In this example, the total is $20,968,848.62. The total amount of state aid shown on the cherry sheet, Form CS1ER, is recorded under Estimated Receipts, State, Part 3A, Line 1. Part 3A, Line 2 is Massachusetts School Building Authority contract assistance payments received by the community. Only payments received under the old contract system are included here. Receipts under the progress payment system from the authority are not included on the recap. Part 3B is Estimated Local Receipts, which includes the local receipts not allocated, which were shown on page 3, column B. Also included are offset receipts, enterprise and community preservation fund revenues. Part 3C includes revenue sources appropriated for a particular purpose, which includes appropriated free cash and other available funds as reported on page 4, column C and D. Part 3D includes revenue sources appropriated specifically to reduce the tax rate. Town meeting or the City Council may vote available funds for the purpose of reducing the tax burden. The most common source of this appropriation is free cash, but also may include stabilization funds, municipal light revenue, or other available funds. A certified copy of the vote must be uploaded into Gateway at the time the recap is submitted. These appropriations are not shown on page 4. The total of the estimated receipts and other revenue sources, $20,968,848.62, is shown on line 3E. Part 4 on page 2 is the summary of line 4A, the total amount to be raised of $52,521,418.54, which was carried down from line 2E, and line 4B, total receipts and other revenue sources of $20,968,848.62, which was carried down from line 3E. It establishes the amount the community must levy in property taxes, line 4C, to balance its budget by subtracting total non-property tax estimated revenues and reserves from the total budget. In other words, the tax levy will be the difference between everything the community needs, shown in Part 2, and everything the community has applied, shown in Part 3. This amount in line 4C, $31,552,569.92, must be equal to or less than the maximum allowable levy, and in this case, it is. Page 1 of the tax rate recap summarizes the information contained in the other 3 pages. Part 1 contains the total amount to be raised, the budget or expenses part of the equation, the estimated receipts and other revenues, the revenues part of the equation, and the tax levy, the difference between the two. These totals will help you calculate the tax rate or rates for the current fiscal year. Let's take a closer look at the section that calculates the tax rate. The second part of page 1 is a table with 6 columns. The first column lists the 4 classes of real property: residential, open space, commercial, industrial, as well as personal property. Column B is the levy percentage of each class of property. In this example, residential property makes up 94.4649% of the levy. Open space makes up 0% of the levy. Commercial makes up 3.9215% of the levy. Industrial makes up 0.3070% of the levy. And personal makes up 1.3066% of the levy. This information is taken from the Bureau of Local Assessments LA5 form. Column C is the monetary amount that each property class must raise to satisfy the tax levy. These amounts are calculated by multiplying the tax levy from line 1C by the specific property class levy percentage shown in column B. For example, to determine column C for the residential class, you would multiply $31,552,569.92 by 94.4649%, or 0.944649, which would equal $29,806,103.62. This means that the residential class must raise $29,806,103.62 of the $31,552,569.92 tax levy. This dollar amount will change slightly in column F. Let's look at one more class. To determine column C for the commercial class, you would multiply $31,552,569.92 by 3.9215%, or 0.039215, which would equal $1,237,334.03. This means that the commercial class must raise $1,237,334.03 of the $31,552,569.92 tax levy. Once again, this dollar amount will change slightly in column F. Column D is the total valuation for each property class. That is the sum of all assessed values in that class. This information is taken from the Bureau of Local Assessments LA5 form. For example, $3,608,486,595 is the sum of all assessed values in the residential class. $149,800,015 is the sum for commercial. $11,727,100 is the sum for industrial class, and $49,910,010 is the sum for personal property class. These numbers are needed to calculate column E, the tax rate. A tax rate is calculated for each class. To determine the tax rate, take the number from column C and divide it by column D, then multiply that by 1,000. Let's calculate the tax rate for the residential class. We take the number from column C, $29,806,103.62, and divide it by the number in column D, $3,608,486,595, then multiply that by 1,000. This yields a tax rate of $8.26 per 1,000 of assessed value. This means that a residential class taxpayer will be taxed $8.26 for every $1,000 of assessed value. If the residential property was valued at $100,000, the owner would be taxed $826 in property tax. Now, let's calculate the tax rate for the commercial class. We take the number from column C, $1,237,334.03, and divide it by the number in column D, $149,800,015, then multiply by 1,000. This yields a tax rate of $8.26 per $1,000 of assessed value. If the commercial property was valued at $100,000, the owner would pay $826 in property tax. I'm sure you've noticed that the tax rate for commercial is the same as residential. When the tax rate is the same for all property classes, the community has a single tax rate. More often than not, the tax rate is the same for all classes. However, a community with different tax rates amongst the property classes is referred to as having a split tax rates. Split tax rates depend upon actions voted at the annual classification hearing. You will learn more about the classification hearing in another module. The final step is to calculate column F, the tax levy by property tax class. To do this, you multiply column D by column E, then divide by 1,000. Let's calculate the residential levy by class. To do this, we multiply column D, $3,608,486,595 by column E, $8.26, and divide by 1,000. This equals column F, $29,806,099.27. Also, the total of column F must equal the tax levy shown on line 1C above. Once the tax rate is calculated and all forms are complete, page 1 is signed by the Board of Assessors and the community submits the tax rate recap to the Bureau of Accounts for certification of the tax rate via Gateway. Once certified, the tax collector may then mail actual tax bills. Let's review what we have learned from this lesson. By completing the tax rate recap, a community sets its tax levy and tax rate for the fiscal year. Filling out the tax recap begins by completing page 4, the Appropriations page, and working backward to page 1. Page 3 represents one part of the community's non-property tax estimated revenues. Page 2 is used to report all appropriated and non-appropriated expenditures and all revenues applied to offset those expenditures, and to establish the amount of real and personal property tax that must be raised to balance the budget for the fiscal year. Page 1 summarizes the components of the tax rate calculations and the tax rates.